How excited should we be? Even
I'm not that excited. Yeah, we've seen this before. There certainly was expectation going into this round of negotiation that we'll see some positive news come out. And certainly from that clip from the president, it appears that things are sort of going well. But I think in terms of the economic impact, pretty limited. There seems to be, through the course of this year, a sort of resignation almost on the part of the Chinese authorities, negotiators, that this is going to be a long, drawn-out affair. And certainly preparations have been made throughout this year for trying to counter the impact, the economic impact of that outcome of basically a long, drawn-out set of negotiations.
How do you think markets are positioned, though? Because every time
cautiously, I would say. We've got a lot of volatility. We see it in rates, we see it in terms of the economic impact, and we see it in terms of the equity markets. It's clearly had a very significant impact on earnings for this region and emerging markets generally. But it's the volatility, I think, that and lack of visibility that's really impacting how investors position.
Mark, what do we get, though, in terms of market reaction, if there is indeed some kind of mini deal by the end of this week?
Well, I think there'll always be a bit of a relief rally, so to speak, if we do get a sort of fanfare of achievement, even if that's possible. But I think it will be short-lived because the economic effect is quite limited. You know, the impact that we've had of sort of starting to dismantle the global trade complex and to reroute some of those supply chains, as we've already seen. You know, the US have been successful in reducing its trade imbalance with China, but it's just been replaced by further deficits with other participating countries that do export to the US. So it's not really solving anything. So the economic impact overall pretty limited, and the impact that we've had on GDP globally, particularly as we've seen trade recede, is something that we've learned to live with now. So I don't think any relief rally will be sustained.
How does a currency pact play into all of this? Does it offset pressure on the currency from a slowing economy?
Well, clearly we've seen throughout this year, China has been able to take advantage of a weaker currency to offset some of the impact of those tariffs that have been imposed. Their ability to do that going forward clearly creates political tension. And at some point in any event, that's going to be back on the table. Now, there was talk of a currency pact earlier this year in April at the outset, and I would suggest that what we've seen this year as the negotiating stance of the Chinese negotiators has changed throughout the year. That has been removed and is off the table. So if that comes back on, I guess that's a sign that there's a light at the end of the tunnel in the sense that a deal can be achieved. I think the market will react relatively positively to that, and we've already seen some reaction. But whether or not that's possible without a broader agreement on the forthcoming tariffs and their imposition by the end of this year is questionable, I would think.
Do you think President Trump will get what he wants, which is a weaker dollar out of this whole FX pact? Because if you take a look at U.S. debt out there, it's still generating higher yields than the rest of the major players out there. Yeah,
that's exactly the point. That former carry trade in emerging market currencies is no longer attractive. Flight to quality, which is all pro-cyclical on the dollar. Continuing to be in play, really. And if you look at the relative performance in any of the major asset classes, you look EM versus domestic developed markets, it really is in favour of the US and to some extent Europe. So money is flowing out of emerging markets into the larger markets, into the US, and that obviously is positive for the dollar. So I don't see anything in these negotiations that is really significantly going to change that.